have this market over here. So as you can see, I'm just going to look at current market literally from this region over here. So I'm just going to look at that region over there, and obviously I'm going to look at the region over there. So I want to use this particular market to be able to spot and identify these levels that I'm talking about. So as you can see, the markets have been going up and down in this specific moment. So the markets have been buying and the markets have been selling, and this has been happening for quite a couple of weeks. We have been stuck around this level for a number of weeks, and as you guys would know already, if you're from my previous channel, you would know that obviously what I want to focus on, I want to focus on US30 only. And because I obviously trade this alone, I know exactly what to look at, and I know exactly what to look for when I do trade this particular market. So the markets have been stuck in this current range. If we're being very much accurate, from 13th of April till today, the markets have been ranging at least within that level and within that range, and that's what we need to look at. So I'm not going to go far back, but I'm going to use this current market that we do have to actually spot and identify proper support and resistance levels. So one of the reasons why I never go to a market that's super old is because I don't want to actually focus on really old data that will end up not being relevant in today's market. So what I want to do is I want to take a time to actually show you moves that will happen as you are trading and that will really affect the market that you're trading and the moves that you're obviously gunning for. So let's take a minute to look at exactly what we do have here. So from the left hand side, as you can see my cursor over there, we do have the market printing out a high price over there. So if I take my horizontal ray tool over there to basically draw over there, if you look across the markets, even from that previous highest point, so remember I said resistance levels and support levels are also interpreted as highs and lows. So if you look at the highest market over there, you are able to see that even over there, the market did kind of, rejecting that same level. Even over here, that's the same level. Even over there, that's the same level. Over here as well, and over there. So the buy that happened even last week came exactly around that level. Now, a lot of people would want to look at this region as just one solid line. But if you really take your time to look at exactly what really happened over here, you are able to see that the two lines in which I drew over there subsequently become that sensitivity area, that sensitive area we're obviously looking at. So instead of having a line like that, I would rather have a boxed region like that. That's obviously going to help me understand that that whole area and that whole region is a level of sensitivity. So once you're able to understand these things, then you're able to understand exactly what you do have in the markets, which in this particular market, we can clearly see that that's a whole region of sensitivity where the market is thrown into that level and the market will go either up or even come back down. So look at this from the left hand side. So the market rejected over there, went down, rejected over that level, went down, rejected over that level, went down, rejected over that level, still went down. So this level becomes a valid area of resistance, because whenever the market is thrown into that level and into that region, the market will basically turn the opposite direction. So these are the kind of moves that we're obviously looking at to be able to understand exactly the levels in which the market is most likely to turn from. So one of the biggest reasons why we look for support and resistance levels is obviously because you want to identify probable areas and regions in which the market will be turning from, most likely to basically turn from. So that's the reason why we're actually looking at these particular levels. So you're looking at the highs and the lows in which the market is printing. So if the market prints out a high price from the left hand side, you want to mark out that high price so that you're able to see what happens on the right hand side. Because remember that if the market establishes that level even from the left, the market can go into that same region, bounce off of that level a couple of times before it actually breaks through that level. So that's the first level that we can clearly spot and identify in this particular market. Again, we do have another level over there. If you look at this high that was printed over there, you are able to see that high over there is actually a region of sensitivity. So that's a whole region of sensitivity. But remember that we obviously want to look at the highest price that was printed over that level as well, which in this case also brings us to this conclusion of these two lines that we do have in this market. Also, instead of drawing lines, you would rather draw a rectangle box over there. That would probably help you understand that whenever the market comes around that level, you want to observe and see whether the market is going to go the opposite direction or the market will actually basically stay in that same level or even below that level. So you're looking at those elements to see whether the market is breaking out of that zone or the market is staying above that level. So that's another level in which we can clearly identify in this particular market. And how do we see that? We see that because the market goes up, comes back down to this region, fails to break past that region, goes back up, comes back down, fails to break past, goes up, comes back down, fails to break past, goes up, comes back down again, fails to break out of that level, and also goes back to that high region, comes back to that lower region. So subsequently, this lowest area, which was the previous highest area, then becomes your probable area and zone in which you want to buy from. So that's a level that you obviously want to focus on to see whether the market really breaks out of that level or not. So this is another way that you can actually kind of get to understand it, to say that these support and resistance levels are probable zones that you want to trade from, and these are levels in which you can be able to basically take trades moving forward. So that's another level that we can clearly see. And also, do not force to see levels that don't exist in the markets, because that's another thing that traders struggle with, that people want to force to spot and identify so many levels in their charts, so much that you end up being confused with the levels that you've drawn, and you're not able to fully understand exactly what the markets are printing out. Because remember that one thing that we gun for, we always want to understand where the market is going. And once we do get to understand where the market is going, that's going to help us understand, possible entry points and possible zones that we want to trade from. So don't have a lot of lines in your market so much that your charts are so dirty and filthy until you're unable to properly see and spot and identify levels in which you can trade from. So again, what do we have here? So I'm going to look at a slightly more recent market that we do have. So we do have that high price that was printed over there. And again, don't forget that we want to look at also the open and the closure of those candles as well, to basically be able to understand what kind of levels we do have. So right now we can see that the current market that we do have has been thrown into that region. Now the market can either reject from that level, which clearly means that the market will turn the opposite direction, or the market can basically react in that region because that simply because that region would have been a sensitivity level that the market wants to obviously respect, and to show that this is a level that really does exist. Now you look at a lot of elements for you to be able to sell or buy from a certain level. This is not enough for you to start selling on that level, and I'll cover that on another video as to how to spot and identify a selling or a buying market, to be able to understand exactly what you're really going to do whenever you're trading. So one thing that I'd really want to focus on as well is also now these minor levels that we do have in between. So if you look at this high price over there and you draw a rectangle to actually understand exactly what happens. So we are able to see that the market rejected over there, came back to this level, rejected again, came back to that level, rejected. We can see that long wick that was thrown into that exact level. So this is now a solid zone that we can have. Remember, before you can identify a level as a level of support or resistance, that level has to at least be tapped twice for you to confirm that level as a new level of support or resistance, in which in this case we can see 1, 2, 3, 4, 5, 6, 7, 8, 9 rejections around that level, which means that that's a valid zone that we can kind of use as a level that we can basically trade from. So from here, the market can basically typically reject from that level, or rather react from that level to find a more recent level that we can kind of use to find entry. So the market can basically do something like this. So the market can pull back into this lower region. From that region, then we can see a long buy into that level.